Welcome, everyone, to the Ultimate Small Business Year-End Readiness Checklist. My name is Mariette Martinez, and I'm a small business educator and advisor and have been working alongside entrepreneurs for the last 2 decades. You have entered into one of my favorite sessions where I pull in several of my favorite topics to empower the small business owner and the financial professional that serves them so we can all walk into a new year by closing our year strong. So what does that actually look like? Well, first we have to prepare for a solid year end. So what does it look like if we really want to feel like we have checked all those boxes and we haven't missed anything for our year end close? And when we do that, we start filling those gaps. We start filling those gaps of those items that may have been missed along the way. We also need to see very clearly that one of the key elements to getting ready for year end is to actually be organized. And not only organized in our business, but financially organized, meaning those documents, those transactions that need to be tracked year round, they all need to be in a specific place. So that way we can, at a moment's notice, go ahead and organize this content so we can start getting ourselves prepared for year end. So what does that look like to get financially organized and then begin that year end readiness process? And that's basically what we did here in today's session. We pulled all of these concepts together. Why? Because we want you all to feel empowered as entrepreneurs so you can feel less stressed and more financially confident, not only at tax time, but year round. Let's start with the ultimate small business year-end checklist. So if you have been preparing your books and your finances, or if one of your goals has been to be tax ready year round, you can use a checklist to really check those items off that you've been working on and to fill any gaps of anything you've missed. But what if you haven't been preparing tax ready books? I want you all to know that is okay too, because you can use a checklist to also catch up and make sure that from now on, you are doing things in the right order to really build that sustainable business. And that's why I designed the Ultimate Small Business Year-End Checklist. I designed this checklist after working with small businesses for over a decade and realizing that they would be asking me very, very similar, or FAQs, frequently asked questions, quite a bit. And then I realized, why don't I just have a checklist that I can review with them every year and really get them all on the same page with me? What this checklist allowed me to do with my clients, it allowed me to bring up some conversations that maybe I didn't think I needed to have because I made assumptions that they understood some financial and tax topics. It also provided the opportunity for us to spark conversations. And so this is not that typical checklist that many people would see, maybe in like a spreadsheet format or a very simple notepad with here are your to-do items. No, this checklist creates curiosity. And at the same time, it educates the small business owner and allows the small business owner to start understanding the universal language of financial literacy. That's what this has been designed for. Now let's actually talk about the checklist. So this Ultimate Small Business Year-End Checklist has been broken down into different sections and with specific goals. So let's talk about that. So first, I broke this down into 5 categories. These were the 5 main categories, as I mentioned a moment ago, that had been asked several times after, serving my business owners after working as an accountant and tax preparer, and eventually really working through the importance of transitioning to an advisor and advising my small business owners. So I realized, let's just bring up those categories that happen over and over again at every meeting. And those were the 5 categories that were built out on this checklist. And the checklist is actually built on the first question, or really the first concept that would most commonly come up in every conversation with a small business owner. And we're going to cover that in much more detail in a moment. Once we understood what that business's entity was, which again was usually the most common question was, well, I'm this type of business, or am I this type of business? And if I am, how does that really relate to my accounting and taxes? Then we would start talking about that. We'd start talking about how their business, their accounting, their workflows, their structure, their expenses, their deductions, their credits, how that all really goes back and applies to their business entity. We'd also cover some basic common FAQs around bookkeeping, accounting, and taxes. And of course, what would always come up is, well, what about those write-offs? What about those expenses? And so then I felt it was important for me to go ahead and give them something to get excited about, which is some common expenses for their business and or their industry. But then I brought them back really quickly and said, okay, so all of this is great, right? This is a great conversation to have. But if you don't got your books in order, we can't do any of this work. So we need to go ahead and prepare your documents and get you financially organized so that way you can have these kind of conversations with me. And so we also cover the importance of preparing your documents ahead of time, which really encourages that proactive thinking for business owners and also allowed me to do that higher level tax planning strategies with them. And again, that was all related to designing this checklist. So this is the full checklist, and y'all have it available to you. And so just imagine if I said, that's the end. No, that is not the end. That is the end goal, right? But we need to break this down piece by piece so you all can be empowered on being able to use this checklist, whether you're an entrepreneur using it for your own business, or you're an accountant and bookkeeper or tax professional using it for your clients. Now, this is best case scenario, that you, the entrepreneur, and you, the accountant, bookkeeper, and tax professional, are actually sitting down alongside one another and being powered by the checklist. This really should be used alongside one another. Okay, so let's keep going. Let's go ahead and deep dive into the 5 checklist categories. The first one is know your legal and tax entity type. The second is know your expenses, deductions, and credits. Then review and prepare documents ahead of time. Know your small business tax deadlines, because we want to make sure that we can sleep at night. So knowing those deadlines or due dates are very helpful for us to stay proactive and ahead of time. And if we're doing all of this, then guess what? We can plan for our best business year yet. But it always starts with knowing your legal and tax entity type. This checklist was also based on the small business accounting workflow, which is a workflow that I designed to really start having a conversation about how simple it is once you are working with an accountant. So once a business owner is working with an accountant, how simple it is for me to explain to them what are the things that we need to do to get you tax ready, finance ready, and really be able to build that sustainable, profitable business that you've been dreaming about, right? The whole reason why you joined the entrepreneurial journey. And so I designed the small business accounting workflow to more easily explain the process of getting from books to taxes. And what I realized when I designed this particular workflow, that the workflow starts with knowing the entity type. So let me show you what I mean. What is the small business accounting workflow? So the small business accounting workflow will take a business from books to taxes. What that means is that when we start engaging with a business owner as an accountant, we are completing their accounting tasks, right? We are getting their books done monthly, quarterly, annually, so that way they can eventually prepare their financial reports and, of course, report that data on their taxes. So when I speak to a business owner, I just say, this is what I am going to do alongside you and for you. And it's very simple. I got to complete your accounting so we can prepare your reports so you can report your taxes. And when I'd explained it like that, they'd say, oh my gosh, that's it? It's that simple? And I said, yes, it's that simple. And when I explained to them what the outcome was and is tax-ready books. And they said, okay, so then my books are tax-ready year-round? You mean I have books all the time ready to go, walk into that banker, go in front of an investor, be able to see financially visible businesses in front of me. I can actually see the health of my business year-round. And I said, yes, that is the outcome. That's the result of tax-ready books. And when I would start to use that language with my business owners, with my clients, they started using the language back. Just think about that for a moment. Think about how empowering it is that you tell your clients, that you suggest to your clients, that you empower your clients that with tax-ready books, they can build a profitable, sustainable, viable business. And then they tell you the next month, hey, I'm ready to do my tax-ready books. You're like, oh my gosh, this is going to be so magical. And seriously, even though you may think I'm exaggerating, I'm not. That's what it feels like when you and your clients, your business clients and the accountant are using the same language to move their business forward. So of course, I had to be a little more visual, not only for my business owners, but when I started teaching the same concept to my accountant, bookkeepers, and tax professional industry, they kind of wanted to see it a little bit more detailed. So that's when I actually designed the end-to-end accounting life cycle. So my end-to-end accounting life cycle that I design and teach here at MasterYourBooks is this concept of it's not only completing accounting tasks, but there are several accounting tasks that need to be categorized. There are several accounting tasks that need to be categorized into separate stages of the life cycle. And so those stages of the life cycle are number one, managing the books. Then you move forward to balancing the books. Then you maintain those books year round. And then you close the books, which allows you to move into the year-end readiness process. Now, if you are doing this year round, if you're doing the life cycle year round, then you are essentially preparing financial reports year round. And of course, you can be reporting on that data, on that financial data year round, whether it's on tax returns. But if you have been in business for some time, there's not only tax returns, there are many informational reports that need to be completed for your business. And you're able to do that if you are completing the small business accounting workflow year round. And that's the importance of the small business accounting workflow. But how do we bring this back to how the workflow starts by knowing thy entity? Well, here's the reason why. Because when I realized that I would sit down with a small business owner for their first session and I didn't know their business entity type, I couldn't correctly determine what is the best accounting structure for them. What is the best accounting solution for them? What is the best way to set them up or possibly have to clean them up so that way their business can really relate to the right entity type and their accounting can actually share that information through the reports? What are those tasks and workflows that are very unique to a specific business entity type? And again, how do I set them up for success, including softwares, solutions, and other ways that I can leverage technology and efficiencies in their business? I could not answer that question without knowing what type of business entity they were, because every entity does different business transactions and of course is reported differently, not only in the books, but also on the tax forms. And so that's when I quickly realized, ooh, I'm jumping a step here. I need to make sure I understand their legal and tax entity before I move into everything else. And I really enjoy sharing this with my colleagues, specifically my accountant, bookkeepers, and tax professional colleagues, because many times, if you are not aware of this step, you need to go ahead and pull back and realize I may have set up a business owner incorrectly. And now that you understand that and you have awareness around that, now you can take some action for that. So that's the importance of knowing thy entity so you can correctly determine the next steps for your business owners. And of course, if you are a business owner, it's even more important to understand your own entity because you own that business. And that's how you complete the accounting workflow, is first knowing the correct entity type, then completing the accounting tax and reporting that information on the financial statements, and then ultimately being able to report on your taxes and any other informational reports related to your business. Now, let's state something that could be obvious. Does everybody know how to correctly identify an entity type? We have to be open to be able to say, I may need some guidance on that, right? Because you may be coming from a completely separate journey. If you haven't been in a place in your business where you've had to, first of all, answer this question for your business, maybe you just were boots on the ground, you started a side hustle, you many times consider yourself an accidental entrepreneur, you kind of fell into this, possibly you never learned this for your business. Now, on the other side, if you're an accountant, bookkeeper, or tax professional, and you haven't done any consulting or advising around business entity and the type of best entity for an entrepreneur, you may also not have done this type of work, and that's okay. The importance is that if you need guidance in knowing thy entity, this is the time to ask and learn about it. So over the next few minutes, I'm going to give you a couple of ways for you to learn how to understand thy entity. So the first step is always to know that you start with the legal entity structure. There is a legal entity structure, and then there's the tax status or the tax type. But you need to know the legal entity structure first before you move into the tax type. This is a very good conversation to have with someone that possibly has been only using a tax professional, because many tax professionals are always thinking about the tax type, but do they truly know that the business owner has provided them the right legal entity type? Or better yet, has the tax professional asked the business owner what is their legal entity type? Because if that conversation hasn't been had, there is a huge missing gap in that engagement. So let's go ahead and close that gap. So assume that you start at the legal entity type, and there's three key legal entity types. There's the self-employed sole proprietorship, which basically means that the business owner and the business are one and the same. They haven't taken any legal action to legally incorporate their business. The next one is the corporation. So this individual business owner has taken the steps to incorporate their business. And if you or someone else has helped you incorporate the business, someone else being an attorney, an accountant, or it could be an online entity website like an Inc. or a LegalZoom, if any of that work has been done, then you should be well aware as the entrepreneur that there was some paperwork filled out, and you need to understand what was completed so you can understand the next step on this process. But you should know whether or not you filled out some information to go ahead and incorporate your business. And as an accountant, bookkeeper, or tax professional, they can ask their business owners for this paperwork. The last entity type is the limited liability company. This is also a legal entity type for state purposes only because it's a state legal entity type. And usually and commonly, this type will be chosen for asset and liability protection. So if a business owner is not particularly ready to incorporate per se, they will choose to become a limited liability company first, and then they can choose what their next progression is in their business. And these are all legal entity structures. Once a business owner has chosen, or possibly haven't chosen, because if they're a sole proprietorship, you don't really choose that. That's just the default. But you would have made the choice to either incorporate or to complete the state designation of a limited liability company. But that doesn't necessarily tell them, how does this apply to how I file for taxes? What is my tax status? What is my tax type? And so that's the next step that you need to take. You need to figure out, how does this apply to the tax entity type? And so what you do there is you go, okay, well, let me just go right back to the start. I started with sole proprietorship. It's the easiest example. And now let me build into what they need to do from the tax perspective. So for a sole proprietorship, they would be considered a disregarded entity. That is a term that you would hear from the IRS. They're a disregarded entity. And because of that, they would be filing. So now we're talking about their tax filing. They would be filing the tax form 1040 Schedule C, because that's how a sole proprietorship files their taxes. On their same personal tax return, they're going to also file their business return. And yes, it is a legitimate business. Sole proprietorships are legitimate businesses. They just file on the same tax return as their individual tax return. Let's move on to the corporation. So now you identify yourself, if you're a business owner, as a corporation, or your financial professional, the accountant, bookkeeper, or tax professional identifies that you have proved to them you are a corporation. Okay. So you, as a corporation, can either file the return as a C corporation, or you can elect to be taxed as an S corporation, which usually is referred to as that small corporation. And at that point, when you understand whether or not an election has been made, that's when you realize what is their tax implication. Well, if they're an S corporation, they'd be filing the Form 1120S. If they're a C corporation, they'd be filing a Form 1120. Now for our favorite friend that just likes to confuse us a little bit, and that's the limited liability company. So with the limited liability company, as I mentioned, since it's a state business designation, right? The IRS, if you are just a limited liability company and haven't done anything else at all, okay, the federal purposes, the IRS will still consider you as a sole proprietorship. You're still a disregarded entity, and you will be filing that same 1040 with the Schedule C. Again, if you haven't done anything else, but you are actually in business with someone else, which makes it a partnership, then you would be filing the Form 1065. But possibly you elected to be something else. And that's what makes the LLC, the limited liability company, so interesting. What makes the limited liability company so interesting, but also could be confusing, is that you can elect to be taxed as a sole proprietorship because you didn't do anything, a partnership because you didn't necessarily do anything, but you are in business with partners, or you elected the S corporation or the C corporation. And so that's what's really important for you to understand. And again, this is an area sometimes of confusion because individuals do not go in the correct order, which again, the order is starting with your legal entity structure first, and then moving to the tax status. And what does this do for you? Like in that picture, woo, right? I'm excited. You don't know how many times that I've taught my colleagues this, especially those that are possibly newer to this conversation. And they're like, I can move on now. Check that box, right? So I'm bringing that checklist back to you because I want you to see on the checklist, if you're a business owner, okay, if you're serving the business owner and your business owner is a sole proprietorship, you don't have to worry about the other three. Check that off the list. You're done. Now, what you want to do is you want to confirm whether they're just a sole proprietorship or possibly they've also done a limited liability company. If they're that, you want to check that off. And now that you know that they're a sole proprietorship and a limited liability company, you can move on to not only correctly setting up their business structure, not only correctly setting up their business workflows and solutions, but now you can start tax planning with the advantages and benefits of their tax entity structure. And that's what should really get you guys excited and understand why it's so important to start with the legal and tax entity. So commonly, once you have realized this, you're like, okay, so let's talk about taxes then, right? Let's talk about those tax basics that are going to empower me as a business owner and that are going to allow me to have deeper conversations with my clients if I serve the business owner. And so this is still part of that year-end checklist. So let's cover tax basics. So let's cover tax basics to empower the small business. The 5 checklist categories. Let's go ahead and bring those up again. Know your legal entity type, know your expenses, review and prepare documents, know your small business tax deadlines, and plan for your best year yet. So where are we moving? We're moving to knowing your expenses and deductions. Because now that you feel confident enough to say, okay, I got this. I know their entity type. I have a good idea of possibly where I can research some top expenses, deductions, and credits for this type of business. So let me understand a little bit more though about what I need to be looking at when it comes to expenses, deductions, and credits. So let's move into that conversation. Well, I like to start this conversation by talking about the lowdown on common business expenses. So many times when people want to know, well, what are my common expenses for my business? Or many times the real language is, what can I write off in my business? And so, there's a very simple answer to that. I say, well, if you know you're a sole proprietorship, let's just carry on that example. Have you ever looked at the Schedule C? Because the expenses are right there. Of course, you can do some Googling and go ahead and pull out some articles for the top self-employed expenses. But have you bothered to look at the Schedule C and see what comes up on that form? Now, to be honest, many times I don't look at the tax forms. I'm not a tax professional. Why would I ever open up a tax return? Guys, my dear friends, that's where you get started. Why? Because this is the end game most of the time for business owners. They want to file their taxes, right? They want to be able to file their taxes. So shouldn't we start getting comfortable with the tax forms? Shouldn't we start getting comfortable with where everything ends up at the end of the day? And so just clicking through and looking at the tax form and looking at what comes up, we'll start getting that comfort level for ourselves, and of course, to be able to speak alongside the business owner on what could come up for expenses, for instance. So that's the first step. You can do this both on your individual Schedule C for a sole proprietorship. You can, of course, do that as well on business tax returns. In the case of the 1065, the 1120S, and the 1120, usually those expenses start on page 1, but you will also find them throughout the tax return. And again, it could be a quick Google or YouTube search of the top business expenses and deductions for that type of business. And so when we talk about the lowdown on common business expenses, of course, I do like to go ahead and share some of those. So here are some common ones that I'll go ahead and bring up for my business owners. But again, these are simple lists. These are lists that you can find anywhere online. And this is not going to help a business owner if they didn't understand really how these expenses apply to their unique business situation. But here is a great example of a quick lowdown on some expenses. Now, usually I like to move on and say, hey, so those are some common expenses, and I'm sure you found them on Google. But what about those not so common expenses? Have you thought about those? And usually, again, I see the eyebrow lift and I see the curiosity spark in their eyes. What are you talking about? And I say, well, guess what? There are some additional substantial expenses that you can take for your business, but they are going to take some digging. They may not be in that very typical place that you were asked to look at, which is on the Schedule C or on the page 1. You may have to search a little deeper onto that tax return, or you may have to do a little bit more digging in regards to your research. And you may have to do some more complex calculations to be able to qualify and identify whether you can take these business deductions. But where that additional work is, that's where you're going to find the additional rewards. And so I usually like to get that conversation even more excited by sharing some of those not so ordinary business expenses and provide examples to my business clients, right? What about those sole proprietorships that are already a little bit nervous about their self-employment taxes? Don't forget to let them know that they can go ahead and deduct half of that, right? Have they considered health insurance premiums? Have they considered retirement plan contributions? Have they considered the 20% business income tax deduction that came in about maybe a decade or so ago, maybe not as long, but there has been several expenses, deductions that have come out over the years that we need to make sure that we are at least aware of them. Even if you're not a tax professional and you're an accountant and bookkeeper that have decided to stay away from taxes, you need to be aware of this. So that way, number one, you can be doing it for your own business because you're an entrepreneur as well, but that you can feel confident to either lead your conversations into the right directions or build a relationship with a colleague. So an accountant or a bookkeeper building a relationship with a tax professional, and then all of you coming to the table with the business owner and having these very powerful conversations to help them do some strategic tax planning. And why do we do all of this? Right? I mean, assuming you all know this, but let's go ahead and just make it very obvious. Why do we track ordinary and necessary business expenses? Here's why. Because the IRS has said that we need to track ordinary and necessary expenses for these expenses to be deductible under the Internal Revenue Code. We are required to qualify these expenses as ordinary and necessary. So what is ordinary and necessary? Ordinary is an expense that is common and accepted in your trade of business. Necessary is one that is helpful and appropriate for your trade of business. And we cannot confuse a tax deduction with a tax credit. They are different. Yes, they both may reduce your tax bill, but they are different, and this is how. A tax deduction reduces your income subject to taxes. So tax deduction reduces your income. So lowers your taxable income before you get to that tax liability calculation. And then basically at that point, based on a lower income, you're going to pay possibly lower taxes. And tax deductions are related to the qualified expenses we were just talking about. Now, tax credits reduce the amount dollar for dollar on a tax return. And so tax credits are the ones that will definitely take more research. They're the ones that when tax professionals do their continued education at the end of the year or those first few weeks in the beginning of the year, they're learning about all the current year tax credits so they can apply those tax credits and hopefully qualify their clients to get that lower tax bill, because tax credits, again, could possibly either get the client, the business owner, to pay lower taxes, or believe it or not, sometimes the business owner could pay zero taxes or even get a refund, because some of the credits are called refundable credits, where you can actually get a refund based on you qualifying for a credit. So yes, you want to make sure you are focusing on both tax deductions and tax credits. And what does this all take us to? Well, by learning the tax basics, you can start building and planning these tax strategies. And this is a bonus for all of you that I've provided to you. It's the opportunity for you to take these type of basics, these fundamentals that we learn, and actually turn them into conversations you can have. Whether you're the business owner and you want to go ahead and have this conversation with your tax professional in the next few weeks, or you're an accountant, bookkeeper, or tax professional, and you want to have these conversations with your business owner, guys, you need to be having these conversations, everyone. You need to be asking your business owner, are you a road warrior? Because if you are, you may qualify for the mileage deduction. Where are you getting your work done? Have you created a home office? Because you may qualify for a home office and you still have your outside office. So you may qualify for your home office, your office outside, and you may even qualify for the mileage driving from your home office to your outside office. So these are the kind of conversations you can be empowered with as you start building those tax basics, as you start building the confidence, and then you can start having these conversations. And of course, hopefully this awareness has built some curiosity in you, if you haven't felt confident around taxes, to go ahead and do some more research and some more homework and really get deeper into how this really will help you build a business. Because even though you want to have a profitable business, that should be our goal, that doesn't mean that you can't have a profitable business that also is strategic around their tax planning. You can do both. And that's really where we leave off in this conversation. So what does it look like to get financially organized ahead of time? So getting financially organized ahead of time is that opportunity for you to realize quickly that if I need to prepare not only for tax time, but also prepare my documents year round, what is going to help me do that? Is there a structure? Is there a strategy to help me feel financially organized ahead of time and all the time? And the answer is yes. And that's why we put it right there on the small business checklist. I want business owners to feel empowered and feel like there's some guidance around document preparation year round. And that again encourages the conversation, because as they see this information in front of them, they're able to ask more of those questions. They're able to feel the empowerment of knowing a due date and working towards that due date. And again, they're able to do more planning and strategizing. But what I want to show you here is what I believe has been the magic that I have brought to my business owners for the decades that I served them. I'm very excited about this because this is something that not only an accountant and bookkeeper and tax professional can do, but a business owner could even do it on their own. Let me explain it to you. This is the small business year-end secret weapon. So the idea behind this is that if you had tax ready books, if you're able to reach this year-end readiness process, then you should be able, out of your electronic software, to export a balance sheet and a profit and loss statement. And this is considered a year-end work paper. Once you've exported out the balance sheet and the profit and loss, you will put them on the same spreadsheet, into the same file. And then you will go into the very first statement, which is the balance sheet, and you will add these two columns here on the right. Mariette's column, in this case, let's say I'm the accountant and tax professional, and the client. And then what we would do, and this is actually what I did with every client every year before we would file their taxes, we would go line by line, and we would have a conversation about each one of these numbers. Sometimes it could be a quick one, just like, hey, Mariette, did you reconcile it? Yes, I did. Do you have any problems with it, client? No, I don't. And we'd move on. Sometimes the conversations would be more in depth, but ultimately we both would make sure that we had documented where we were at and where we ended on those books before we'd move it over into the taxes. And this was literally my tax work paper that I moved into the tax return. When we would have these conversations, we'd make sure to document where was that source of truth inside of their filing storage. So again, step one is I would export the balance sheet and the profit and loss and put it into one work paper. Step two is I'd add the columns so I can have the conversation with the business owner, and I can go line by line and make sure I agree with every number that's going to ultimately move on to the tax return. Step three is that I would have proof of each one of these line items, and these are the source of truth that I can go quickly and find inside the cloud storage if I needed to. So for example, for the checking account, $1,201, I would have a end of year bank statement. That would be my balance sheet item number one, and that would be my source of truth. And guess what, everybody? Where would I find it? I would find it right in my cloud storage. Step number four. Step number four is that in a moment's notice, if a business owner was not sure about that $1,201 that happened at the end of the year, we can go ahead and open up their cloud storage. We can do a quick search for that balance sheet, item number 1, and it's the year-end bank statement, 12/31, let's say 2022 in this case. And in matter of seconds, we'd be able to prove that number that's right here on this work paper. And that's basically how we would walk in to our tax preparation meeting. And that's it, everybody. That's how you prepare and how you go from books to taxes. So let's go ahead and wrap us up for this session, the Ultimate Small Business Checklist class. What were the goals for this class? Well, let me go ahead and remind you of them. First, we wanted to prepare that solid year end with a checklist that would fill those gaps and spark some curiosity, not only for you as a business owner and or as an accountant, bookkeeper, or tax professional serving the business owner, but what I hope we all got out of this is the importance of having those deeper conversations, having those more significant conversations with one another so we can stay ahead of the game. So we don't have to worry about whether or not it's tax season, whether or not it's tax time. We want to be having these conversations all the time. And the second goal, which I truly believe was even more important, is for you to all feel empowered, for you to all feel that there is a method, there is a process, there is a journey to allow yourself to feel less stressed and to feel more confident year round. And that's why we base this entire class with a checklist. Why? Because checklists help us fill those gaps. Checklists help us feel confident. And as Charles Munger says here, no wise pilot, no matter how great his talent and experience, fails to use his checklist. Thank you all for being here. Bye for now.